You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hey everybody, welcome back. What a great title we have for MT Live today. Trend trading, thing that says trend reversals, but it's about trend trading and trend reversals. What's happening over the last, I guess, couple of weeks and even intraday, there's been a lot of reversals without trends. And while we've been in a trading range with reversals flip-flopping in one direction or the other, and that isn't going to last, never does. Most times a trend will go on much longer than we believed it could. And sometimes this period of indecision can go on a lot longer than we would like it to, because the majority of gains are made during trending markets. Now, in a market such as the one we've been in, things trading ranges or even erratic kind of price patterns, credit spreads work extremely well, but not everybody trades credit spreads. They're a relatively simple instrument to trade. And, but, you decide you have different tools for different markets. And so we don't subscribe to one market is the best market, meaning you'll have those that specialized in maybe a commodity or Forex and so on. So what you find is that different markets can be on their own page, so to speak, or an individual stock. And our approach here is to use a method we call Master Trader Technical Strategies that's applicable to no matter what. So look, if you want to be a trend trader and you see a certain market isn't trending, you can move to another one. There's some nuances to those, which you learn, but what you're going to learn here in today's MT Live, you can take it with you to whatever you're trading, whether that's a currency pair or crude oil or Apple Computer or an ETF, because it's universal to everything. So let's do that.
Awesome. Good afternoon. All right, let's just dive right into it. This is our approach to the markets. For those of you who have been with us, you know this. We're technical-based traders. We start with a compelling pattern, which we'll get into. One of these, and there's others. And then we say, okay, where is it in connection with one of these trends? Is it on support or resistance? What are multiple time frames saying? What are the broader markets doing in the sector saying? And we go through this, we combine these concepts. You will hear us talking about these every single time we look at any chart whatsoever on any time frame. It's a combination of these that make up our high probability approach. And you might think, oh, well, that's too complicated. I want a red light, green light system. And that's a whole nother discussion. But once you internalize this information, Greg and I, as fast as we can pull up a chart, I say 1/8 of a second. As soon as we see a chart on our layout at home, then your brain instantaneously says that's a high probability setup. But that, you got to start with education, and then it's just experience after that.
Yeah, Dan, go back to that slide for a moment. Just again, for those that we've always got lots of new people that learn about Master Trader. And so many of you are being inundated, with different methods, ideas on how to trade the markets. So what we have this list here, sometimes we call them concepts, different types of analysis. Any one individually won't create a trading plan for you as to what to do. And that's why these are lined up as they are. And so while we say price is king, well, you can't trade without seeing what prices are, because that's what we're placing trades around. Now, candlesticks, we look at that in that format because it creates pictures that are easier to see. That in of itself doesn't allow us to trade. Is the trend going up, down, or sideways? Well, that's a good starting point, which is what this next slide is about. So you want to trade in direction of the trend primarily, unless it gets what we call climactic. And then look, the trend is operating in different time frames, which can be totally confusing at times because you can have one time frame up, another one sideways, another one down. So a deeper understanding of that is required and how to put that together. Support and resistance. We don't make it complicated. No esoteric tools, no proprietary software, no hidden numbers. We just look to the left and say, hey, this is where buyers were before and sellers. Volume spikes. What are the broader markets doing? Well, broader markets often influence the majority of stocks. And then into market analysis, what we call our three-legged stool: technicals, market internals, into market analysis. How is one market affecting another market, which we see to a tremendous degree today that interest rates and the US dollar have a substantial effect on the broader markets and stocks. At some time in the future, that'll disconnect. I don't know when, but I've been doing this long enough to know that it will, because it's happened before. And then position and money management. Without that, without money management, it's like any other business, you're not going to make it.
So, when we start the foundational course, we start with basic like this, and we teach what an uptrend is, downtrend, sideways trend, higher pivot highs and lows, lower, relatively equal. These are what we call the trend or transitional phases. And these are the only 4 or only 7 things that a stock can do. And we teach you, number 1, how to recognize what stage you're in. And number 2, what to do, what tools that you use in each one of these. So today's subject is turns, right? So what I want you to keep in mind, that regardless of what of these 7 market events we're in, every time we enter a trade, it's going to involve a turn. Let's just keep going in order here. So that's what I'm saying here, but just in some words: stocks move up, down, or sideways. The turn, the pattern, is telling us now it's time to enter on this time frame that we're trading, and then apply the other concepts that we started with on page 1. So this is
Go back to that one more. Yeah, because it's so basic, but I don't want to, assume some of the thoughts that may or may not be happening, because it's easy for Dan and I, because we're doing this so many years. But I just want to say something that you might say, well, yeah, Greg, that makes sense. Well, to some people, this stuff doesn't, it makes sense, but they don't think about it. So in a situation like this, I like my little drawing thing here. Let's get this. And it's like, okay, says uptrend. Think buy. Downtrend. Think sell. Sideways trend. If it's wide enough, think buy, think sell, but also think it's directionless. And then, of course, these transitions down here, which we'll look at some charts. But I want to reiterate that everything that from that first slide that says, here's these concepts that build strategies to, hey, this is going up and this is going down and that's going sideways. Everything for us is producing thoughts and beliefs. And your trading plan is a guideline. This is what my belief should be and my thoughts. And then we're going to build on that.
All right, so Greg, since you opened the discussion a tad further, why don't we answer this for him? So I'm in an uptrend, Greg, higher pivot highs, higher pivot lows. how do I objectively determine when that uptrend stops being an uptrend?
Easy, good question. Don't I need some proprietary tool for that, Dan?
Well,
So look, so we have a series, right? It's in an uptrend. It's making higher highs and higher lows. Wow, what a revelation. And so now we mark off what we call an area of major support, the low prior to the higher high. And if it violates that, it no longer meets the definition of an uptrend. And that one occurrence, and for those of you that are connecting the dots, that occurrence will violate your trend line every single time. So this one piece of information, this one concept totally eliminates the need for trend line analysis, which is subjective, completely subjective, because trend lines can be broken and the trend does not get violated. So that little definition, right? The low prior to the higher high being broken below violates the uptrend and vice versa.
And then, we're not going to get into it today, but that's a fact. Then we go into, okay, what do I do with that fact? Well, it depends if you're in the trade, if you're looking for a new one, or, multiple time frames, but, that's beyond today. So today we're talking about turns and patterns in connection with those 7 stock market events. So just as we always do, start off slow. So these are all different reversals. As Greg, I keep telling Greg, I wish he would make a seminar for how to teach an 8-year-old how to trade. And every one of these, they went down, they went up. They just did it in different flavors and different combinations of bars. So that in and of itself is not a pattern, but they're all turns. And then we're going to show you how to combine the turn with a pattern with the other concepts, trend, support and resistance, patterns, etc.
So, and to reinforce what Dan just said, it's like, if we were all looking at the same stock, we're all looking at Microsoft, and I'm looking at it on a 5-minute chart, and I see this, and you're looking at someone else, not me, I mean, someone else in the audience is looking at this on a 10-minute chart, and you see that. And Dan's over here on a 15-minute chart, and he's compressed this into that, and he sees a bottoming tail bar. Well, we've all seen the same thing. Prices went down and they went up. We just saw them we saw it in different ways. And one of the reasons that we go through this slide is so that you are freed from this candlestick hype of, hey, this morning star or this piercing or this engulfing or so on and so forth is more powerful than this candle. And that creates a whole belief system that I need to see the one on the right. I've been there. That's why I talk about it like this, because when I read that, it was like, okay, I need to see that. And now I start looking at all these different time frames trying to find that picture. And I was like, I'm scratching my head, like, which time frame am I supposed to look at? Because this is getting so confusing. And then it was just a realization of like, hey, they all went down and they all went up. It says, so if I know that picture means the same as these other pictures, I don't have to be hung up on that picture.
Okay, so that was an excellent description of multiple time frames. But as you're going to see in many of these examples in the remaining time, we're going to have different flavors of reversals on the same, let's just call it a daily chart, and they're going to have different implications of a multiple bar turn. And these again, these every one of these are compelling setups, but they also, every one of these are turns. their turns. And we're going to combine, again, that turn with the pattern with the other concepts. And now we have a tradable approach. So let's now apply everything we've just talked about. Uptrend, we covered that. Higher pivot highs, higher pivot lows. Greg says we're looking to buy bullish setups in an uptrend until the uptrend ends. Okay, well, here's one. There's many others that we have in our toolbox, but this is the simplest one. We buy a pullback and reversal on support in an uptrend. Okay, Greg, what's a picture of buying? What's a reversal?
Well, these are good examples of those.
It's what we just covered here. These are all pictures of reversals. And this is just two other variations that Greg painted here for you. When we see this picture in an uptrend, retracement, reversal, pictures of buying on support, we enter over the reversal, stop under the reversal, and manage in between.
As you can see, right, they just happen in different ways, but they're pictures of prices that went down and then they went back up again. So we don't need to get hung up on it happening, just how we want it to happen, because these mean the same thing. And as we take these pictures and we put them in the appropriate location, that guides us to that buyers are taking control. And that is what's supposed to happen when prices are in an uptrend and pull back to where support is, which is like another word for that's where buyers are going to be and demand is going to increase. And so now we look for these confirming pictures of things are going down, making the turn or the reversal. And however it happens, these different pictures mean the same thing.
Many examples. So here's a bullish turn on support. So every one of our daily charts are this simple. Red and green candlesticks, color-coded volume. The blue is the 20, green 50, red 200. So, nice power uptrend, deep pullback. So that's a different subject. But notice how this is pictures of buying right here. None of them are going to be the same, but these are pictures of buying on minor support, this prior breakout area. I have a gap range expansion reversal. So that would be a 1-bar reversal. Now I have an inside bar, which we call a bull 1, 2, 3 continuation. We buy over the high of that. It's a 2-bar reversal. And, pretty much another inside bar. This is a closed trade. We track all our open and closed trades in the members area. We give the stock, the date, the technical setup, how we're managing it. So this was a bullish 1, 2, 3 continuation at the 50-200. Moving up, trail your stop, sold half pre-market, and so forth. That's how we give our trades to subscribers, of following exactly what we teach.
So Dan, before we go, I have a question that was here. Does this sound too simple? Do you think Dan and I are oversimplifying patterns here and trends? This is an objective question to get some feedback. Sam says no. Robert says, I need it simple, don't we all? So what I wanted to add to that is, look, we have to try and make it simple, because complicated may sound impressive, but that doesn't mean it works. But what I want to add to this pattern here, just a little bit advanced thought process, is that when I see a pattern like this, and this is like a beautiful uptrend, Demand is in such control, and we see red bars ignored. There's no pivots. And then all of a sudden it comes down really hard. So I'm recognizing that something has changed here, which creates uncertainty. Remember, these pictures create beliefs. And so when prices retrace down to this area with these big red bars, like there's a whole more red bars here than there were here, something has changed. So why should I continue to believe it's going to go up? Well, first of all, it didn't violate major support. Right? We defined that before. It's at, looks like the 100 and the 50 MA. And so this gap reversal, and then this next bar, right? We can refer to that as like a bottoming tail bar. And then this bar, part of what our concepts is that the negativity of this coming down, the strength of that selling begins to dissipate. And when we look at multiple candles together, let's just clean this up, multiple candles coming together, where all of these are pretty much in the same area, that's beginning to dissipate the energy of that move down. And we can see how that buying is building up. So there are setups such as this, which is like a continuation pattern, which is great. Whereas this one, the depth of the pullback, you really do want to see a little bit more, a few more candles coming together. Mm-hmm. So there's something to think about when you see something that retraces the way this has, and you see the change from here to here, which is going to change your thinking. And so what I'm saying here is, okay, we have this change in thinking from here because of this. Now here, my concern, right? I'm like super bullish. I want to get on this thing because it's going to go. And now I'm like, I'm not so sure. Well, if I can have this many bars in a location like this, now I'm interested again. My concerns have dissipated.
I got a bunch of stars on here. This is today's subject, right? So this is we use moving averages as visual aids, speed up the analysis. So this was in a nasty downtrend. I mean, look at the angle of the 20 and 50, but it's going sideways here. So do you remember our transitional phases? Downtrend, going sideways. And I don't know if it's going sideways to make another leg lower or if it's going to break to an uptrend. So we don't guess, we wait. So here, this was a little gap breakout, little inside bar. This is my trigger bar. So forth. Remember pictures of selling? Although this is pictures of selling, not in a downtrend, like we said was a master trader sell setup, but it's pictures of this ain't going up anymore. So that's a turn. This now down a lot. I'm bar by bar. I'm waiting for information to tell me about a tradable event. So this was a good bar. Now I got two bearish bars. That suggested lower prices. Then it gaps up. This closing range expansion bar, to me, 99% suggested lower prices. Now I got three inside bars and it gaps up. Here's a buy setup. The buy setup in an uptrend, multiple bar turn, just like we showed you in that prior example. So with every one of these stars are different flavors of turns.
The one that I marked off there was to the thought of what did that look like before it turned into a red bar like that, and what were traders thinking? Because as mentioned, these patterns, these pictures are representations of what other traders are thinking and what they experienced. So this was in such a nice upward trend. I mean, that's a beautiful little consolidation right there on top of the 200, and then it advances. And then as it continues, it gets nailed right back down again. Now, that in of itself did not suggest this was going to go down the way it did. I mean, in another market environment, this green bar could have turned into something where it was going up, but it didn't. So there are other pieces of this analysis that's not about today, but that's where on that first slide, we talk about market internals and intermarket analysis. Something was going on there that caused this correction. But in any event, it did. I mean, that bar right there was big trouble. That was a big, giant green bar. And then, of course, as Dan said, this looked like it was heading down. And then, it gaps back up and up it goes. And so this whole recovery here leads us to thinking this kind of a pattern is viable. So as you can see, our thoughts and bias could be like, wow, this is fantastic, to what the hell happened? That's going down. Now it doesn't look like it's going down. And so a pattern like this immediately produces a thought of, well, that's not going down, but how can I make money from that? Credit spreads. It's not going down here, but is it going up there? I don't know. So I wouldn't be looking at this myself directionally. After this, over here, I would. So you have different trading vehicles that you can utilize to take advantage of different price patterns.
Just, many examples. This is the S&P 500 ETF downtrend. This was an economic number. This is pre-market, these dotted lines. So that created whatever 10 o'clock number it was. Nasty bearish breakdown on volume, suggested lower prices. Didn't go lower, churned its way back up, fully negating this. Now here's my buy setup. So do you remember we started with a buy setup earlier? This is a 1 or 2 bar reversal after breakdown failure, price void. So for day trading, this was a phenomenal entry right here. So I'm just showing you here, this was a bearish turn. This was a bearish turn. This one is a breakdown failure, made a turn. They're all different flavors. So this one, breakout failure, made a new low, but notice 20 and 50 are still going up. So my short and intermediate term are in uptrends. So that alone is telling me, look for some type of bullish turn. And, we purposely don't give you perfect, beautiful charts. I mean, this one's sloppier. This one broke down, made a new low, bottoming tail, higher low bottoming tail. And this was my complex turn at the 50 MA.
So what Dan said, first of all, was look at the moving averages. The 20's above the 50, and they're both ascending, which means you have the daily and weekly timeframes trending higher, which says my thinking should be buy a pullback, buy some kind of bullish pattern. And then, well, let's just say you watch this MT live and you're watching this tomorrow and you see this and you're like, okay, I wonder what the hell those guys would be thinking after that breakout failure and this thing breaks down. Well, we're going to tell you, we ain't thinking about buying it.
Right.
but we are of an opinion that because the big picture is up, that something like this is possible. And so now we wait. We're not shorting that because the big picture is up. And we want to see if something like this would, Dan said a more complex pattern, which it is. Is there a name for it? Well, we could call it some kind of a retest pattern, of course. We don't need a special name, but as Dan said, bottoming tail bar, that form there. And, with that happening like this, and turning all the way back up again, yes, think long, because let me use the term, it's the damage has been repaired. That is damage. Creates uncertainty. What will alleviate that uncertainty? A bigger pattern, which is what I said before, where we saw that really nice uptrend and then things came down real hard and we had a bigger pattern, more bars to help take away the uncertainty and bring confidence back in, where we see that buyers are stepping up on a dip, right? This is what that institutions are stepping up on the dip. They're like, I don't care about the candlestick patterns. It's like, hey, I thought this was a great buy here and now it's cheaper. So we're going to buy it. We don't want to, we want to be more precise with our entry points. And that's what we're explaining here, is how to be more precise within the context of the big picture. Thing is, how can I choose some stock in India for trading like I have $1 to $200 price range targets? Well, first of all, you'd want to scan stocks trading in India, right? And then you would write a scan like we have scans. And it's, if you're using something like TC 2000, and I don't know if they have, well, you can see stocks in India, but maybe something like that is a platform trading something or other. They have everything, but I don't know if they have a scanning feature. But what you would do is just write a simple scan that says, show me stocks that are traded between $1 and $200 and a certain amount of volume. And, you bring that down to a certain level of instruments.
Come see us in the trading room. Greg and I start at 9 a.m. Market review, pre-market review, gaps, hit lists, answering questions all day, scanning, trading together. So it's really watching us implement our master trader approach in real time. In real time, we're trading, applying it, not talking about these beautiful little screens. All right, so this was a nasty downtrend, nasty breakdown, looks lower. Breakout failure, cracked all this support. I'm guessing it's earnings, but I have no idea. Shock, a pro gap, a shock over 2 red bars with a range expansion, closing breakout. That's a very bullish bar. Then I got a couple of inside bars to this. That's what we call a bullish 1, 2, 3, 4 continuation. After a pro gap and it's resting, that's an amazing, powerful turn. Negated this downtrend back to an uptrend. Look, the gap up brought my 20 MA back up. Trading's about, and one of you mentioned, hey, experience, and yeah, we make it sound simple, but it's experience that gives us the confidence. When Greg and I look at something, we immediately say it's a no-brainer. It doesn't mean it can't fail, but we're odds traders, and the probability of this moving higher over these bars is astronomically high. And so our analysis suggests that, and we calculate position size based on your max loss, the entries over this red bar, stop under these inside bars, and you manage in between.
And there was many years ago when I used to do these trader expos, and I did a presentation, and it was based on what I called a money bar. That was it. And because what makes that a money bar, which is essentially was like, you're going to make money if you trade this pattern. And this is a great example of it, because what we have here is a situation where prices were going down. It's a big shock pattern, and it clears all of this resistance with a wide range bar. And then you get these inside bars, and the money bar part of it is the fact that you get this bottoming tail bar that takes out 1 or 2 bars lows and it springs right back up again. So this picture in the context of this would avoid up above, right? All of that coming together is like, okay, this is a money bar, but there are multiple concepts that come together to make that a money bar. So it's like, it's just like me saying, hey, this is a bearish engulfing pattern. Does that mean I'm going to trade that 2-bar reversal? No. But when you understand all of these concepts that are coming together, that was trending down, that was negated, a shock, there's volume, this little breakdown failure, the void, that's what makes a trading strategy, not 1 bar or 2 bars.
Bottom multi-month bottoming pattern, 20 MAs flattening out. I have a gap breakout. Here's another beautiful bar. Greg was just saying, it opened flat, went down to the gap fill, sprung right back. The next day it gapped down. Our entry is over this bottoming tail bar. Big price void. Price void means look to the left. There's insignificant resistance. Think of these as football players. So I'm building 2 months of support here. It's not going down anymore. And now it broke out and I have bullish price action. Another no-brainer setup. These are just climactic buy setups with multiple bar turns. Remember one of those earlier charts we looked at? This is a 1-bar turn. Climactic buy setup, bottoming tail, range expansion on volume. Same with this. But the more bars you have, the more confidence you have, because it's not going down anymore. And the more bars is support. It's just common sense. And so now you have a closing breakout here, closing breakout here with a price void. Red bars ignored, topping tails ignored. That's a beautiful continuation track pattern to trade a climactic in a downtrend. Target could be the 20 MA, kind of makes sense, 50% retracement, but those are counter trend trades. So that's one, Greg has this saying, it's the same but different. So Greg, doesn't this look like the same but different, than this one? It's just the same flavor. It's just different. Nasty crack. Now this one was not a closing breakout on the first bar, but so what? It's the same message. The next bar went up to resistance. Red bar tried to fall back. Green bar took out the low. This is what we call a 180 reversal. Now I have a closing breakout. It's the same message.
Yes. So the way we interpret messages is based on the chart, of course. And what makes things difficult is that sometimes things can change rapidly. So we have to have a method to be able to change with it. And this chart's a little crazy. It's a little crazy. But you've got this kind of trading range going on. And over here, it takes out this part. So as it's consolidating here, what are you going to be thinking? Well, I'm going to be thinking, hey, bottoming tail bar, it's going to break out. And something happens. And, it goes down to that next pivot there to the left. And that fails. So ultimately, it's got to come down here. And that's where the strongest demand is. Now, when it's down there, it's retraced 100%. That's not good. So at that point, I'm thinking, well, if it goes sideways, maybe it's going to go back down here. I don't know anything else that's on the chart. I don't know about market internals or anything that's going on, back at that time. And what I'm showing you here and explaining is, okay, in essence, I really don't have to. It would be helpful, but my thought of sideways here, that's bearish because of the retracement. And now it goes all the way back up again. I'm like, I'm dizzy, man, but I'm with you. I'm with you. Now it's back to neutral. And now this reversal is so bullish. It's like, okay,
That was the key.
that's it. Place the trade. The craziness should be over. Looking at this on a bar by bar analysis, giant bar, 2-bar reversal, sideways, it should go up. Now, if I bring into this, maybe what's the broader market doing, relative strength and weakness, market internals, those are pluses that could add to the probability of what this pattern is already telling me. So, this is how we teach and what we call our approach being a 3-legged stool. We have these patterns, which incorporate multiple time frames and volume and so on and so forth. Then there's intermarket analysis and there's market internals. Those are the three legs.
Excuse me. So what I'm showing you here is, we're talking about turns, right? And that's what I'm saying with this little graphic. There's no confident turn. Look at my moving averages. I have railroad track declining 20 and 50. So, and we've done MT lives on trading proper bottoming patterns. Of course, we've been doing these 4 or 5 years now. This is not a good bottom at all. It's just an intraday bounce and a downtrend. So notice this price action. There's no turn. There's no confident turn based on what you've learned here today. So this just went sideways in a downtrend. Here too, there's no turn. There's nothing of interest on this.
Yeah, 1 sec. Let me answer Jim's question. He said, do you consider a moving average immediately above of concern, or do you disregard and look to areas of supply, resistance, prices that are more likely would distort the move? So moving averages are subjective, Jim. They're lines on a chart that we choose to put there. Now, we like them because they give us information about multiple time frames and, of course, a visual representation of prices going up, down, or sideways. Do we need them? No, we don't. So again, said they're visual aids. Now, a moving average being above prices being a concern, the first thing is, are prices going up, down, or sideways? Now, if we have a pattern whereas prices were bottoming and the pattern is suggesting prices are going to move up, but a moving average is there, I like to use the term, well, what's the weight of the evidence? It's because ultimately we're striving not to be wrong. Right? That's our goal, not to be wrong and to make money from our trading decision. We don't know, right, with 100% certainty that we'll be right. So we have to weigh the evidence and say, look, this moving average right here, will that stop prices? I don't know, it's a little extended. I wouldn't think so, but it's there. And if I, this is a 20 MA, what if I had a 30 MA or a 40 MA or a 10? Or if I used a 5 and now the moving average is here. And you can see how subjective that is, right? Oh, now it's above the 5 MA, but it's below the 20 MA. You're getting crazy. But if we look at something, whereas it was going down and it's bottoming and it's had some kind of rejection and back up, and now the 20 MA is over here. You see where I'm going? I'm not so concerned about the 20 MA that's going to stop because of the weight of the evidence. And I believe because it went down and sideways and the failure and such, it should go up.
And so last slide here before we look at charts, I grabbed all of these pre-market, and I actually was talking about this, Greg, in the green trading room today, that you and we look at something and, we have multiple thoughts. But one thought is, what if it does something different than is what the weight of the evidence is. So I grabbed these three examples. So Airbnb here, it's working on being a retest pattern. But what if it takes out the high of this red bar? Then I have a price void above, and maybe I trade it for 1 to 2 to 3 days and sell it out of the money put spread, saying I don't think it's going under this bar's low. So you see my title up here, setting alarms for potential turns over, somewhere near this red bar. It could be a potential turn for a put spread. Dash here, not as good of an example, but ask yourself, it had a power move up and it's pulling back these overlapping bars or support. What if it were to trade above this red bar's high or the topping tail? Then it has a price void, and we'll take a look at it and see if there's anything tradable for us. Same with Square.
Was like that.
Same with Square. It's stabilized. I have 1, 2, 3, 4, 5 inside bars. It came down hard, so I'm not expecting a new high. So get that out of your mind. But it's right here at this gap fill, and it's stabilized. So I have an alarm at, I think, 63.95. If it gets to the top of this range, I want to be notified. All right, so every chart we look at, we've started slide 1 with the master trader approach, combining all the concepts. That's what Greg teaches in the swing trading course. Go to mastertrader.com/swing trading, and you can hit all these individual things. Just hit this little icon on the right, and he calls them thought building lessons, because he's building a story of explaining technical analysis. And obviously at the end, the goal is for you to objectively know how to read price action. And then, as we've said a number of times, it's experience from that point forward. We only give these holidays specials once a year. Seriously, people ask for it, and like, wait till Christmas. And we give discounts on our online seminars. We have 3 advisory letters in our live trading room. Greg posted the link there. This will bring you to the same place, mastertrader.com/holidays.
No brainer.
Yeah, it really is. So as always, we save time to look at the real markets so we can apply. We'll answer any question you want, but we like focusing on today's subject in real time. So if you have any questions of, hey, is XYZ a nice bullish, turn on whatever time frame, we'll spend the remaining time answering questions.
So George, thank you, George. George says great price for the green room. And if you calculate that as to what your cost is a day for what it is, I know what you pay for the annual, but like $1.60 a day to get education and trades every single day. It's a no-brainer. It's ridiculous. But anyway, we have a great group in the room, and those that are in the room share their trading ideas and the questions and the conversations, and just a wonderful environment to learn and make money.
Well, and just to add to that, Greg, we periodically get emails, they want private coaching. And I'm like, well, it's, $500 an hour. And if you want, I'll take your money, but spend $7 and whatever the monthly or yearly is, but you can take a $7 trial for a week and talk our brains off all day long.
All right. You got 2 more slides, Dan, or am I moving over?
Yeah, they're old leftover. No.
Okay.
Well, I just showed them this, you can go to the website.
By the way, in that list, I covered a tremendous amount of information, trader psychology and putting together a trading journal. So it's more than just the technicals and the intermarket analysis and market internals. So It's great. And by the way, at the holiday thing, the full MTS course, the full options course are available there at ridiculous low prices. And you can add the swing course for 50% off. A lot of people do that because it's just to focus on swing. And so there's more examples. The full course covers swing trading as well, but there's so many more examples just at 50% off. It's a no-brainer. All right. Okay. GC 2000. Netflix weekly, you're saying. All right. Let's change that to a weekly. Netflix. It's having a good day today. You know, that's pretty erratic price action. Just going back to what we covered. So Netflix had gotten killed. And this was a long period of repairing the damage. And then there was this explosive move. Now, that first pullback, you look at it as being viable. It was uncertain, but the gap up there, that was bullish. And now you've got this pattern, which you've got this bottoming tail pivot and this reversal. So that's a buy setup, black and white. Now, the weekly isn't so desirable. And one of the ways that to look at something like this, because you see this topping tail, of course you do, I would say, how about if we look at it like that? So candlesticks are great. Sometimes can add a little bit of noise to what's going on. But this is just going sideways up here. And this pattern supports that it should continue the advance. So I like it. I like it.
And I love it for put spread too. I have a big, and we're waiting for Powell and beige book to get through, but that's a fantastic put spread too.
Yeah. Terrence, I can't look at ES. This platform doesn't have ES. I'd have to open up my eSignal platform over here, which I'd have to shut it down behind me. But I can look at SPX or SPY in relation to answering your question.
Yeah, do SPX is similar.
Sam was asking about RY. 5 and 15. A little retest pattern there. So banks got killed today. I wouldn't look at it anything more as a real scalp, and the way it's moving, there's no wide range bars down here, Sam. I'm really not interested. All right. SPY. That's in a trading range. It's kind of whippy. I would stay away from it for now, personally. SPX. It's going to be the same, and it's in a trading range. It's at the bottom of the range and bouncing up here a bit. So if you want to trade this, you look to the left and you see where the low is, and this came all the way down there. And so now with this reversal, or, look, if you so choose, and that's what I would do, is go down to the 2-minute and be buying it down here. And I would be offering out some over here. So if you're doing multiple contracts and this thing moves up like that, I'm offering some out because the way that came down, I'm not thinking it's going back up there. So you got to have different position and money management strategies, which is the AMS course. SPX reported today, mentioned that if you're less experienced with options, which option course is best, the mastering spreads? Well, direction, the two different courses, Mitchell. But look, if what I would suggest, because of the holiday discounts, buy them both. There are two different ways of using options. One is like directionally, which you could do for swing trading as well as intraday trading. And guys, give me 1 second, please. I want to say goodbye to somebody that's leaving. And buy them both. They're both discounted here. Give me 1 second.
Yeah, and the other one is obviously selling. Here, I gotta pull my chart up. One second.
All right.
All right.
Back. Goes to pivot. What else? Exxon, XOM. So let's go back to the daily chart. It could break down. So what you have here, let's just change this to an hourly, right? That's Control 6, maybe. Yeah, Control 6. So you have a trading range. And it's in the middle of the range. It's kind of like a coin flip. Which way is it going to go? You know, opposing pivot lows by opposing pivot highs. Intraday, we can see what it's doing here. If it breaks these lows, it looks like it's coming down here as I spread it out. I mean, that's the only thing you can think, because until it breaks down, like you're asking a question, we could only, it's an assumption. Why should it break down? Well, it's moved a whole heck of a lot. This, we look at it, well, it's under distribution. Well, yeah, but somebody's accumulating it down at the bottom. Who's going to win? Well, you can put some indicator on there, a MACD, whatever. I can see that the upward momentum is slowing down at this point. We look at the weekly chart. Sure, it's a little extended, but it's consolidating. I don't want to short it. But if it breaks the lows, then we can trade a 1, 2, 3 continuation pattern, or if it forms a bearish 180, some type of failure like that. But right now, I wouldn't do anything. Jim, right? Jim's saying, hey, you know what? Why it's in the middle of the range there. If you could do an iron condor, which is selling a put spread and a call spread above and below the ranges, that would make sense. And then how much time to expiration?
Yeah.
All right. So options, there are different moving parts versus saying, well, is it going up, down, or sideways? That's one part. Well, now how do you want to try and take advantage of your analysis? Well, what strikes, what time to expiration, and that's what the courses are about, what Dan teaches. Just looking to see any other questions here. Look, everybody, what Dan have I explained, what we do in MT Live every single week is what the courses are about. Right? So 1 week we're covering trends and reversals, another week we're covering credit spreads or directional options or failure patterns and so on. You know, whatever it might be. I like to say the courses are the fast track, and you know, getting the coaching sessions, which, you know, if you sign up for the courses here now, email Dan or I, and I'll be sure to send you the last 2 coaching sessions. And by the way, I think the option courses, they automatically come free with the Kickstart program. So there's that, and we'll send you the last 2 coaching sessions. So a tremendous amount of education, you know, going into the holidays, watch the courses, you get 24/7 access to them, watch them as much as you want, you know, stop, reverse, listen to that one again, and so on. So Paul's asking me, do you ever use VWAP? No, clean charts, no VWAP. Volume weighted price average. It's just another way of saying, where did the majority of the price action take place? So for this, it would be up here. And we look at it, you change time frames, whatever. Wherever there's congestion, you're going to have, whether you're looking at market profile, like a point of control, you're looking at VWAP, just look to the left. Common sense is what we use. Now, a 200 period moving average or a 50 period moving average, why them? Self-fulfilling prophecies on a daily time frame. But keep it simple. You don't need all of this fancy stuff on your chart. It's all about the price action. And that's what you need. After 30 years of doing this, it probably took me in the beginning 5 years of scratching my head and looking at all that kind of baloney to say, keep it simple, Greg. This is what works. So we'll be back next week. If you have any questions, email myself or Dan, Greg at Master Trader and Dan at Master Trader.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.